What's up, everyone? It's Scotty with Money Investing. Today is the day. We've got Tesla earnings coming out after the markets close. They're going to be for the first quarter, fiscal year 2023. And Elon Musk, we're going to be looking forward to some guidance. And the most important piece is going to be the margins for their automotive. So automotive margin is going to be extremely important for the company. That's really what's going to drive the stock price after hours, in my opinion. And the reason for this video, well, they did another price cut right before their earnings. So this is the sixth price cut for Tesla. So this right here is the headline from earlier today. Tesla cutting price in the US for the sixth time this year and slashes prices again with brand new cars now starting under $40,000. So their Model 3 has been cut down from $41,990 to $39,990. That's going to be their rear wheel drive Model 3 standard range, which is their cheapest vehicle. And we're seeing a little bit of reduction there. And their Model Y prices have also been lowered. So Model Y all wheel drive went from $49,990 to $46,990. So $3,000 cut. Model Y long range went from $52,990 to $49,990. So now under $50K. And Model Y also now costing less than $54,000. So all eyes and ears are going to be on the margins themselves. Tesla is on this news selling off pre-market down a little bit over 2%, trading as low as $180. But I was looking at some of the costing of their vehicles, and you know what? I wouldn't be surprised if Elon Musk and Tesla actually do end up shocking investors today based on the margins that they report. It's possible, in my opinion, that margins actually end up being very strong for Tesla if we also consider the cost side of the equation. So, and there, I'm not taking away from the fact that this could also spur some demand, which I'll touch in just a minute. The psychology behind demand and supply with respect to prices. We'll touch on that maybe later in the video. But when you talk about the costing, right? And we're going to come back to this as well because interest rates have obviously gone up in the US when it comes to auto loans. I mean, they've gone from like 4%, 3.5% to now sitting at over 6.5% as of March 2023. So this obviously has made it a little bit more challenging, more difficult for people to actually finance Teslas. When they're costing $50,000 to $100,000, obviously nobody is, very small percentage of people are going to be buying it outright with cash. Most people are going to be financing those vehicles. And when you have interest rates at over 6.5%, 7%, that obviously makes it even more challenging. Monthly payments going to be higher. Total interest paid on the vehicle is going to be much higher. So obviously demand is going to start to slow down when you've got interest rates as high as 6.4%. You can obviously see this entire spike in interest rates as soon as the Federal Reserve started raising interest rates in January of 2022, pretty much last year in March of 2022. And that obviously has reduced the demand a little bit for vehicles in general, not just for EVs, but for all automotives, right? So for all vehicles. Now, I was doing some, again, research, looking into what EV batteries, again, are made of. Lithium, of course, is the main component there. A typical EV battery has about 8 kilograms of lithium, 14 kilograms of cobalt, or however you say it, and 20 kilograms of manganese, although this can often be much more depending on the battery size. A Tesla Model S's battery, for example, contains around 62 kilograms of lithium, or 138 pounds. Now, that's a pretty big component into a Tesla vehicle, right? Because it doesn't have an engine, it doesn't have a combustion engine or anything like that. All it has is a battery, right? So that's why it's got spaces to store pretty much on both ends. So you've got battery to work with. It's a pretty significant, composition-wise, it's a pretty significant piece of the overall vehicle. Now, this is another really interesting sort of a image that I was able to find. So when it comes to the body chassis, we got bauxite, we got titanium, bar and steel, copper wire, and carbon fiber. Pretty much are some of the cost related to making a Tesla vehicle. This right here is in a lot more detail. And again, some of the more important things that are used in making Tesla vehicles are going to be, lithium, nickel, cobalt, zinc, titanium, some of those things that are really important in kind of putting these pieces together for Tesla vehicles. Now, this is what's really interesting. I was looking at the prices for some of the cost, right? Lithium prices over the last 6 months, they've actually been very stable at around $80 to $90 per kilogram. These are prices per kilogram. And you'll notice that starting in January 1st, 2023, this is the date here, January 1st, this significant drawdown, right? I mean, this has been selling off. You can see lithium prices have literally just fallen off a cliff, and they've come down from roughly, $80 per kilogram to now trading as low as 30. That is a pretty substantial decline in lithium prices, if this is indeed correct. I was looking at dailymetalprices.com, pretty much goes over all metal prices updated as of April 17, April 18, 2023. And they also go over some historical charts. So right now we're looking at the last 6 months. So lithium prices globally have certainly come down from, $80 to $90 per kilogram to now apparently at over 30 or just a little bit under $30 per kilogram. That's a pretty substantial decline. I mean, if you think about it, it's over a 50% decline in lithium. This right here is going to be cobalt. Again, however you say it, cobalt. We have seen prices over the last 6 months. And again, you can kind of see it in January, right? I mean, it was pretty flat at $52.5 per kilogram. It's pretty stagnant there. And then January hits and we started seeing prices come down dramatically, now at $35 per kilogram, right? So that's also not exactly a 50% drop, but that's still a pretty substantial drop, 30 to 40% pullback in prices for this metal. Copper prices have been relatively stable. In fact, since January 1st, they have actually gone higher. They were at about $8 per kilogram to now over $9 a kilogram. So they have pushed higher a little bit, but they have been a little bit more on the stable side. But the usage of copper obviously is not super high in electric vehicles and for Tesla specifically. Aluminum prices have come down since January. So you can see that it was roughly around $2.65 per kilogram. It's come down to a little bit under $2.40 per kilogram. So again, you can see the prices coming down over the last 3 months for this particular commodity here. Palladium prices over the last 6 months also lowered. They've been coming down as well. And again, you can see from December, January, and you can go back and what Elon Musk was actually talking about in September, right? You go back September, October, he was tweeting that another rate hike from Federal Reserve is going to cause deflation in the economy, right? So it kind of makes you think that, I mean, of course, CEO and upper management obviously has a lot more visibility into what they're seeing over the next 3 months, 6 months, 12 months out with respect to prices and their cost breakdown. So, I have reason to believe that Elon Musk is not cutting these prices. They're not doing these price cuts out of a surprise, but instead these are very calculated in a way that, okay, prices are coming down, the cost is coming down. We're seeing a lot of disinflation in the economy, and as a result, they can offer better prices to their consumers, and as a result, by maintaining and keeping their margins steady. That's what I am actually expecting from Tesla. Zinc prices also coming down in the last 3 months. You can see again from January all the way to April, they have been on a strong trend lower. This right here is going to be steel. So you can see steel is actually the only one that's actually gone up in the first quarter. So it's gone from like, I think $600, $700 per MT. I can't remember what that is, but it's gone up to over $890 now. At the moment. So we are seeing metric tons, right? I think that's what it is, metric tons. So $890 per metric ton, it's pushed up, right? So it's actually gone up in the first quarter 2023. So that's one of the commodities that's actually pushed up. But again, steel, not a lot of usage for Tesla vehicles. So one more thing that I want to mention is expectations. That is actually going to be a potential problem and a concern for Tesla, because when you think about Tesla doing 6 price cuts in 2023, what is the consumer going to think, right? If I were in the market for a Tesla, right? If I was looking at buying a Tesla, and if I saw like in the last 3 months, Tesla's already done 6 price cuts, right? They've consistently cut prices over the last several months here. Now, my thought process would be, my expectation would be that Tesla will continue this behavior. They will continue to lower prices, and I would just delay my purchase, right? I would just wait. I would be patient. I would let the prices come to me, something that I've mentioned on this channel time and time again. And that's what causes deflation, right? If consumers, if the expectations are the prices are going to go lower in the future, people delay their purchase, and as a result, prices indeed go lower because the demand starts to go away, right? And that is a big concern for Tesla right now is if they keep on these price cuts, keep on coming, then you've got consumer expectations pretty elevated that they're going to continue to cut prices. Tesla, pretty much consumers going to start to believe Tesla's going to cut prices in the future, and they're not going to buy it, thereby demand going away, and Tesla will have to lower prices in order to spur that demand. So in that scenario, it becomes more of a spiral where both prices and demand are going down, right? So that is something that we have to be aware of, and I think the only way to stop that is if Elon Musk sort of comes out and mentions it on Twitter or says officially that no more price cuts in 2023, we're keeping these prices or something like that, right? I mean, in other words, this is the last price cut or whatever, something that puts a stop to all these price cuts, and that doesn't create that expectation among consumers that these price cuts are going to continue. Because if consumers start expecting more price cuts, they're going to wait for the purchase. They're going to delay their purchase, and thereby demand is going to start to lower. Inventory is going to start to rise again. So that's something I wanted to discuss. Now, in terms of margins, I do believe it's going to be quite an interesting topic of discussion. I still do believe that Elon Musk and Tesla have something in store for us. They can definitely shock the market with keeping margins steadily high at over 19-20% automotive margins. And if margins come in that well or that high, I think it's over for all other OEMs. I think other manufacturers are going to be done. It's game over if Tesla can lower prices and maintain margins at the same time while guiding for almost 2 million vehicle deliveries this year. So I hope you guys enjoyed this video, found it helpful. If you did, make sure that you drop a like. Let me know your thoughts in the comment section down below. As always, make sure that you drop a like, subscribe to the channel. Link to our Discord and Patreon is going to be down below if you're interested in joining us. 16% annual discount available till the end of this month. So always happy investing, and I'll see you all in the next video.